As housing prices and sales continue to drop from the previous year, new numbers from the Canada Mortgage and Housing Corporation confirm predictions of a continued drop in prices in 2023. Patrick Perrier, the housing agency's deputy chief economist, expects the national average home price to fall 15% from the peak seen in the first quarter of this year by the end of the second quarter of 2023. Mr. Perrier attributes the drop to housing demand slowing as interest rates rise. But despite the price decline, he believes housing affordability will not improve. This is because any benefits that can be reaped from lower prices will be offset by higher interest rates. Well, joining us now to tell us more about what to expect from the housing market in the coming months is Mr. Patrick Perrier himself. Sir, welcome to Forum Daily.
Hi, thank you. Nice to be here.
Nice to have you, sir. So, what do the latest numbers indicate in terms of the current state of the housing market amid these interest rate hikes?
Yeah, so far as we have said, since the beginning of the year, we saw a decline in house prices and also cooling in housing markets like the resale activity. So all of this points to, as we were predicting, cooling off in housing markets and declining prices. So that is what we're seeing so far.
And how are these continued interest rate hikes by the central bank impacting Canadian homeowners right now and probably in the near future?
Yeah, so essentially that's a part of the story. Just maybe a bit of background. Earlier this year, before interest rate came in to increase as much than what we expected. But before that, we were still expecting a slowing in housing market from, I would say, unsustainable levels we've seen since mid 2020 up to the first quarter of this year. So now the bank and other central banks have started to raise interest rate to bring inflation back to lower levels, to targeted levels. And of course, we've seen some impact on the housing market. However, I would say that maybe it's not, I think the full impact has not been felt yet on housing market because it takes time for interest rate rise to affect the economy. And as this effect is building from past interest rate increases, but also we're expecting additional rate increases until the end of this year. So those will, of course, these effect will build. So therefore, we see additional pressure on prices going forward as well.
So, what does all of this mean for potential home buyers in Canada, Mr. Perrier? Can they look forward to more affordable home prices in 2023?
Well, I think that would be a natural conclusion to reach. However, like you said earlier, that will be the lower impact from lower prices. Their impact on affordability will be more than offset by rising interest rates. So that means that a monthly mortgage payment, which combines both impact, so basically interest rate, mortgage rate, but also the price as well. So there will be the rise in rates will dominate in this case. So meaning that it will be less affordable despite that decline in the price.
Now, considering that the central bank will likely ease up on interest rates in the future when inflation is in control, do you think home investment in 2023 is a good idea for the long run, Mr. Perrier?
Well, what I would say is that we expect, like you said, eventually once the inflation is back under control, then rates will decline from the peak level we see reaching at the end of this year or early next year. But even then, what I would say is that in the long term, what drives house prices or housing demand is what it is a growth in population. Population is trending up over time. Same with incomes. Incomes and standard of livings are also increasing over time. So that will support housing demand. So demand will continue to grow. So meaning that eventually, once we reach that floor, somewhere in mid 23 in terms of the house price, then they will resume their growth after that. So this is what I would say in the longer term. There's a trend up in house prices. And the reason is that we have increasing demand, as I mentioned, that is predicted, but also we have that supply issue in Canada, not enough supply. So when demand increases, that puts pressure on supply. So therefore, prices are increasing more than in a case where we would have a strong reaction of supply to increasing demand.
All right, Mr. Perrier, a quick 30 seconds left here, but what about the rental market? How is the rental market being affected amid all of this?
The way we see it, again, it's because of limited supply. We have potential home buyers that now might have put their project, maybe delay the project or just decide to stay on the rental market. So meaning that we could expect rental demand to increase. in a limited supply world, therefore meaning more higher rents. Therefore, affordability condition will also deteriorate for the rental market. So this is what we see going forward.
All right, Mr. Perrier, thank you again for joining us today on Forum Daily.
Thanks a lot. Happy to be there. Bye.
Stay with us. We'll be right back after a short break on Forum Daily News.